I can't believe I'm sitting here saying this, but we've done it. We've built a £100,000 investment portfolio starting from zero. It's crazy. And I say we because I want to start off by saying a huge thank you. Yes, I've put in a ridiculous amount of time and effort into getting these videos made, but without every single one of you watching, this wouldn't be possible. It blows my mind that a £100,000 investment portfolio has been built from teaching people how to invest for free. It all started from me learning how to invest by the luck of having a friend who knows how to do it, and then I decided that other people needed to have this knowledge too, taking a leap outside of my comfort zone and starting this YouTube channel. Then I asked one simple question. What would happen if I invested everything this channel makes into the stock market? And here is the result. Let's catch you up on what's got us across this finish line so quickly, and I'll break down some key numbers that make up the 100k, how much I've contributed, the different income sources, and how the portfolio has performed. And then I'll also share my plans going forward and what's next. This all started right back in January 2021, over 3 years ago, when I uploaded a video exposing a crypto pump and dump scheme that I had fallen victim to. Please do not go and watch that video, it's awful. From there, it wasn't until July that I actually made any money at all. My first payment from YouTube was a huge £2.31, and that was a huge milestone. Getting to that point took 34 videos, and some of which did well, and some completely flopped. There were times during the period where I wanted to give up and thought no one was remotely interested in hearing what I had to say. On average at this point, I was putting 15 hours in per video, some even more. I don't know about you, but most people certainly wouldn't want to do 500 hours worth of work for £2.31. But I persevered as I knew there was potential. In January 2022 was when I actually had enough money to do something with it. My full-time business was and still is a web design agency, so luckily I didn't need the YouTube income to survive. It was just a combination of late nights and weekends. That's when I decided to start investing the income. For those of you who have been following this series for a while, you might remember that episode 1 was actually much different from the rest of the series. I started out by investing in individual stocks, which I thought was really fun. But I soon realised that buying stocks with a 3 to 5 year timeline of buying and holding wasn't really that viable for a monthly series. It just turned into a lot of me saying,
I know it's down now, but it won't be in the future.
And at some point I would still like to revisit that, but it didn't work in the format I wanted it to. It also attracted a lot of people who were interested in individual stocks, but that was kind of the opposite of what I was trying to do, which was encourage everyday people that they could invest. So I switched things up and moved to index funds. I wanted to practice what I preach and show people that step by step it's actually possible just by buying one thing and continually holding it. Since then, I've been investing all of the money this channel has made into the Vanguard Developed World Fund, with the ticker symbol VEVE over on the Vanguard platform. I chose Vanguard because I needed it to be within a SIP, or a self-invested personal pension, so I benefit from the tax relief, which also helped accelerate the portfolio, as you will see. You'll probably also be wondering why I'm invested in the income version of the fund, which pays out the dividends, rather than the accumulation version that automatically reinvests them, which is actually much better. And that's because Vanguard has only recently added the accumulation version, so this series actually predates that. So I stuck with the one fund rather than having two, as I wanted to keep it clean. I'll show you a little bit later how much I've had in the dividends that fund has paid out, as I think that's really interesting. So I initially planned for this series to be a nice round number of 10 episodes, but with the latest performance of the stock market, we've been able to hit it much sooner than I expected. In the last episode, we hit £84,319. Since then, we've had the 4 busiest months of the year for investing content: December, January, February and March, as well as an incredible Q1 for the stock market. Q1 has been the best Q1 in 5 years for the S&P 500. Here's how much I've earned in those 4 months and how much I've been able to add to the portfolio. The income on this channel is broken down into 4 categories. We've got ads that play on the channel, there's affiliates if someone signs up for a platform that I recommend, and there's sponsorships, which I'm super selective about, and my Patreon, which is my Discord community where I help people on a regular basis. Ads was £1,066 in December, £934 in Jan, £1,211 in Feb, and £1,076 in March. Affiliates is always my best source of income. In December it was £1,394. It went up to £2,452 in January when more people started investing. And in February, it was 1,848. And a huge, wait for it, in March, 6,357, which is the prime ISA season when people choose their accounts for the whole year. And it's by far my best month, which carries the whole year. Sponsors, I did a little bit more in this period, but still I'm turning down 90% of things that I'm offered due to them not being regulated or too risky. It was 250 in December, 1,000 in January, 630 in February, and 1,250 in March. This time of year, I get bombarded with offers of sponsorship, but there's just so much I wouldn't use myself that I can't recommend. I like to keep things like my best ISA and SIP comparisons completely sponsor-free. Patreon, I made between £130 and £150 per month, nothing crazy, and I really appreciate the support. My next plan with this is to make an investing tool and include regular investing calls, which I think will be a big boost. In total, between the 4 months, the income was £20,047, which was incredible. Now, of course, here, I need to save money for national insurance and tax, so I save 30% of the income and pop it into a high-interest savings account, and then I'll invest the rest. This came out to £14,033. Now, at this point, I did a bit of a tax calculation and worked out I'd be more beneficial tax-wise if I add some from my company so I could save more on national insurance. I did a couple of tweaks here and I added £10,000 from the company and £3,200 from my YouTube income. It was still the same income, it just worked out to be more tax efficient to do it this way. And also, because of the way tax relief worked, I invested slightly less as I was already over the 100k threshold at this point with the market surge. Since then, the market has surged even more and the portfolio is now standing at a balance of £102,644. And as you can see, we've just hit the new tax year and my allowances have completely reset, so I can invest up to £60,000 into the account this year. If we look at the performance, you can see I've invested £88,184 and I've made £13,618 and I've ended up with £101,802. This figure is slightly lower because it doesn't include £800 of the government bonus that I'm still waiting to receive. These typically take around 4 to 6 weeks to arrive. My rate of return has been 26.39%. This is based on a formula called internal rate of return, which takes into account new money coming into my investment and how long the money has been held. This calculation is interesting because when you think about it, for example, I made different percentages gains off different deposits of my money. The older money deposits would have done much better than the more recent ones. What's really interesting is if we actually remove the government tax relief from this account, the physical cash I added, taking away that 20 or 25% bonus, however you look at it, is £68,000 and I've ended up with £102,000. This is what makes the SIP so powerful. When you think of it like this, as opposed to the money just sitting in the bank, I've made a 45.33% difference, which is amazing and shows just how powerful investing can be. As of now, here's how the portfolio is made up. I've got 80,740 in the FTSE Developed World Fund, 15,446 in the Sterling Short-Term Money Market Fund, and 5,546 in another. You'll have to excuse this as I did make a mistake and I meant to put it in the same one. Oops. It doesn't really matter if it's income or accumulation as it's all within my wrapper. I've sold this today to correct my mistake. I've got this much in cash at the moment because I've added quite a lump sum in one go, and I like to spread out my investments when I feel the market is high. Over the next few months, I'll be splitting this up £5,000 per month and just getting it invested. And here you can see the Developed World Fund is up £10,800. If we look at it in more detail, here is how it's broken down across my investments. I did mix and match a little bit throughout the series. I had an emerging markets fund and a FTSE UK fund at one point which I sold. So that's why these numbers are a little bit different. My investment gain was £10,900. My gain on investments sold was £395. My interest was £1,060, which is quite high as I did have a huge chunk in cash before they capped the interest rates on the Vanguard platform. The Developed World Fund does pay me a dividend, but it's not my primary focus. But some of the companies within there do pay a dividend. It's currently 1.6%, and overall I've had nearly £1,400 in dividends. Of course, if you had the accumulation version, they would be automatically reinvested instead. And my charges for the account have been £160, which is not too bad over the 26 months. That averages £6.15 per month for the charge of the account. Although I am aware that Vanguard's fee does scale, it's 0.15%, so at the moment that's £12.75 per month. It's not a huge concern, but I do need to watch it as the account grows. That can go up to a maximum of £31.25 per month. It's not crazy even then, but debatable if you think that's value for money or not, because of course there are some cheaper options. Now let's look at the juicy part. How has the fund done itself? You can see here in green all the points I've bought into the market. I could have been a little bit more consistent with this. There was this period here where I thought the market was too high, and I decided not to invest and hold some cash because I thought there was some trouble brewing. I think I actually made the right decision, although I wouldn't encourage you to do the same. It can quite easily backfire. But these dots stress the importance of how important it is to keep going through periods where the market isn't doing great. All through this area here, it was pretty grim and it didn't do much at all. But now I'm reaping the benefits of staying the course. I will say, however, this chart instead I do love, because you can see how I've added on a consistent basis. You can see how you can almost ignore the individual chart and just see the portfolio continue to grow. The fund's performance through the time it's been invested has been pretty choppy. 2021 was a really good year for it at 21%, but 2022 was a bit of a shocker, all round at minus 18%, and now 2023 picked up and was 23%. A better way to look at it is cumulative returns, which is 17% over the past 3 years. The fund has returned 63% over the last 5 years, which I think is incredible. Definitely a really good, solid option for the portfolio. My allocation for the fund is pretty standard. I'm 55% in North America, and the rest is mixed quite broadly across the globe. My allocations are slightly lower than the actual fund because I'm holding £20,000 in cash funds. My biggest holdings are what you would expect, the big tech giants, so even though I'm buying funds, I still have the majority of my money in these companies, and that's what we need to remember. And I've also got broad exposure across a range of different sectors. Now I've actually pulled out a month-by-month breakdown by Vanguard so I can get even more data on how the portfolio has been doing, because I know people love to see this. So here's how much I added every month to the portfolio. This did vary quite a lot depending on my earnings for the month. Certain times of the year I earn way more. On average, $3,391 got added to the portfolio each month with the tax relief. Of my own cash, it was $2,713, and let me just mention, that is by any means not normal. This is just because I went full send for this challenge. Here's how much I gained and lost each month. The best month was a gain of $2,968 in February this year, and the worst was a loss of $1,477 last month. These are only going to get even more big and scary as the portfolio grows, which will be interesting and terrifying to see. This chart shows the swings in the portfolio. Towards the start of the portfolio was very rocky, when there was a lot of uncertainty in the market. And you can see more recently as when it's been in more of an upward trend. What's actually more interesting is if you look at the cumulative returns. We were completely in the doghouse for the first 8 months of the portfolio. I had only made £2.10, I would have made more money leaving it in the bank. But this is why I think this series has been so good. I've not done it in a time where everything has just been flying upwards. It showed what building a portfolio is actually like and how you have to persevere through really rough times. This chart is quite shocking and shows a cumulative return gain. And as you can see, we were pretty stagnant and we had a slight rise in July 2023, and then from November it's taken off like a rocket ship. This is why we need to keep the mentality of just keep getting it in there. So when it does finally take off, it's where the biggest returns are to be made. So the question is, how much work did this actually take to do? Let's take a look at what we made in total. Patreon was the lowest at 5,452. After that was YouTube ads, which is decent, but it's not enough to cover the time it takes to make these videos at all. It was 18,145. Next was sponsors at 21,525. It might surprise you, but I've easily turned down over £200,000 worth of sponsorships in this time. So when people complain about sponsors, just remember how selective people have to be who don't just want to be a complete sellout. The biggest by far was affiliates, and I couldn't run this channel without them. And this was 52,860. So in total, I've earned 97,982 so far from this YouTube channel. I'm really happy that I've been able to achieve this figure, and I'm so grateful. It's a far cry from the people making multi-millions each year, but it's definitely a much more realistic picture of what YouTube is for the majority of creators on the platform. And let's not forget, people are doing a lot more work than me and still making less. Let's break this down into what those figures actually took though, which I think is far more realistic. As I've already shown, it took me 7 months to earn £2 on YouTube, so let's look at the bigger picture. In total now, I've been doing YouTube for roughly 40 months, and in that time, I've made 167 videos, which is crazy. That's an average of 4.175 videos per month, or roughly 1 per week. Now, on average, my videos take around 10 hours to make. Some are much longer, like my ISA comparisons, which can take up to 100 hours in total. But let's be conservative and say 10 hours per video. I already had the majority of my equipment for my channel, my computer, and so on. But to be fair, let's include the cost of my microphone, camera, and some general expenses, and deduct £4,000 for my expenses. My computer in itself was around £5,000 at the time, but I'll absorb some of that cost into the figures as it's not solely for YouTube. And yes, unfortunately, I bought my computer at a time where the graphics cards were stupidly expensive. That leaves me with £93,982 earned. At a rough estimate, that's 1,670 hours which I put into videos, which would give me an hourly rate of £56.27 for working on videos. Not too shabby. But that's not entirely a true picture, because I spend a minimum of 10 hours per week on top of this, thinking about YouTube, researching, planning, ideation, and so on. All of that slashes my hourly rate to £28.13 per hour, and that's me being conservative. Sleepless nights, worrying over videos, the stress and anxiety that comes on top of this, which most people don't talk about. Worrying what people want to see, why content isn't performing, is far more time consuming than anyone likes to admit. So while on the surface of it, you can look at £90,000 figure and think that's incredible, the reality, it's a part-time job, if not a full-time job. There's definitely a golden pot of money somewhere in YouTube, but I'm yet to hit it, especially with such a niche audience, which I'm happy with. But I think it's a far cry from what people think YouTube actually is, and how easy it all looks on the surface, especially now that there's way more compliance and regulation than when I started, which increases the workload on every video. But let's talk about how this translated into the accounts. I had to take 20% off for tax and 10% to cover national insurance. Of course, we got the 20% back when we added to a pension, which brought us to £88,122, which has then grown in value to £102,664, which the portfolio is at today. This is why investing money into a pension and getting that tax relief back is so important, as you can see how much more I've ended up with by doing it this way. If I would have left the money in cash and we assumed an average over that time of 3.5% in interest rates, I would have gained £2,400, giving me £71,000. If we put it into an ISA, we'd gotten the same 16.5% increase, and I would be at £79,903. And of course, because I've chosen to put it in a SIP, it's now £102,000. When you see those side by side, you can see the difference a SIP can make in the accumulation phase. So the question is, now we've smashed through the 100k goal, well, what's next? Well, my initial goal still stands of wanting to hit 1 million, which I've always had as a target in my sights. But my initial goal of wanting to hit £1 million in an ISA has changed. Hence why I've put all of this income into a SIP, as it was more beneficial. I still want to aim for that goal, but it's going to be split across a range of accounts. In an ideal world, I think it would be awesome if I could continue to make this series up to 1 million. It would be pretty long, but it would be interesting. But there's 3 main problems, however, with that. The first is that YouTube's become so much more than a part-time job now, and honestly, besides building my SIP, I've taken no money from this channel whatsoever for my personal use. I'm fortunate, but the only way I can get more content out is to shift my focus far more towards YouTube and making more content. So it is taking up much more of my time. And truthfully, it has for a while, especially with things like these really in-depth comparisons, which I do. Second is that my focus has shifted into a realization of then versus now. I currently have around £250,000 in my account already, so I don't actually need to go full pelt into a retirement account. I actually need to spend some time enjoying this 20 years of my life too. I will likely just end up over-investing. I'm in the process of buying a property, which I expect to happen this year. And from then, my goal is going to shift into 2 courses. One will be growing my investments, and second will be paying down the property so I don't pay extortionate amounts of interest to the bank. I would love to somehow incorporate that into my plans, as it will be a huge part of my goal. This year I'm turning 35 and I need to make sure I have a property fully paid off by the time I retire. But of course now with the prices of property, if I want to pay off a property in 20 or 25 years, I'm going to have to be pretty aggressive with my overpayments. So my goal will be to split my income between my investments and my overpayments. Third is that honestly this series has been so much fun for me, but it's also not a very accurate representation of where I actually am. I'm only showing you one of my investment accounts, which always feels a bit awkward. I'm planning on shifting more towards a regular update where I'll show you all of my accounts and how much I add to each one, which I think you guys would prefer more. It still may be titled Vanguard to £1 million, just across a combination of accounts. I will put a poll out and I'd really like to see your guys' input on that. Besides that, I've recently launched my investing course and hosted a live Q&A call, which was so fun. The feedback has been so overwhelmingly positive and I've been asked to do more live Q&A calls, which is really fun. I've launched a TikTok where I answer investing questions, which is also so fun, and I have a portfolio tracking tool in the works, as well as looking at building an investing website. So things are pretty excited and I will let you guys know any updates as always. I love being transparent and sharing all of this with you. Once again, thank you so much for your support and following this journey. I will keep doing this all the way until the £1 million goal. Let's get more people investing. Thanks.